So thank you all for having me. My name is Elizabeth Dodson. You can call me Beth. I apologize. I'm going to move back and forth between these because that's what happens with age. But what I thought I'd do is to keep us on track is to make sure that we follow a bit of an agenda. And I'm going to tell you a little bit about who I am, how my journey actually happened in tech, because it was a slightly unique situation, how we came up with the idea of Holmes Era, how that idea came to inception, what it means to educate people about a brand new idea, because education is key. What did we learn? What are we still learning? What were our challenges and still some different challenges that we face today? And then why understanding your users and always be selling is super important, and where to spend your money. Okay, so what I'm going to do is I'm going to actually show you a lot of specific details that are about our company, but also in some of our pitch decks and what have you as well, so you can see real life information. So first of all, a little bit about me. Technically, I am the CCO of our company, which is the Chief Customer Officer. So I care about all of my partners, all of my end users, and I also have primary responsibilities in business development, marketing, and sales. That includes social media, that includes content, that includes also managing finances, because I have financial budgets I have to manage for each of these departments, as well as the overall company. And also I play a role in providing value back to the product team, because I'm also here supporting the customers, making sure the product actually meets the customer needs. So it's really, really important. However, just so that you know, I'm also not a fan of titles. I'm just not. Because it depends on what day and what hour I may be a different role at a different time. And that goes for anyone in a startup. If any of you guys are in startups, yes? All right, good. You probably all know that you have a different role, different day, different hour, different time, and you need to change your hats frequently. So I am a Maryland girl transplanted to California, and I love my state of Maryland. And for people who don't know where it is, it's that tiny little state that's red. It is a tiny little state. It's got a lot going on in it. It's one of the most congested states we have in this country because it's so close to DC, Philadelphia, Baltimore, etc. And then, which also makes me an Orioles fan and a Ravens fan. That doesn't work over well in my household because my husband, by happenstance, is a Pittsburgh Steelers fan, but we get over it. I also came through this through what we refer to as AEC, or commercial construction. In the world of AEC, it means architects, engineers, and construction. And so when I first got out of college, I went to work for a finance organization, so a big bank. And I was in the mortgage department, and I realized I didn't like that aspect of that kind of work. I just didn't love it. I didn't feel like I was building anything. And all of my family and friends were all involved in some level of construction. So I was like, okay, I want to be involved in this. So I got a job with a hardware company in Maryland called Jatico. Jatico built hardware applications for estimating companies to take to their customers on a large general construction project. And when I talk about these projects, I talk about things like the King's Arena, like the airports, like the tallest buildings in the world, those types of things. Those are where people need to estimate those projects, and they need to be very precise, because in the world of commercial construction, it's a 1% to 3% margin that they have on all these jobs. So it's really, really tight, so everything's got to flow perfectly. And that led me to working here in California, because my experience in what we refer to as AEC tech got me an opportunity with a company called Meridian Systems here. I came on board to Meridian Systems. I was employee number 22, so it's very early stage. Full disclosure, I also was dating the co-founder of that company, long distance, for 2 years. So I was very well aware of the what was going on in the company very, very early on. And also, I was very familiar with the industry because I'd been in it so long. So I came here and I filled a gap, and the gap was between sales and marketing. And what happened is, one of the things I want to tell you about this story, because I think it's important, even though it's not Holmes Era and it's Meridian, it's relevant to all startups, is we chose a traditional method of hiring people in marketing, people who had the discipline of marketing skills. So someone who understood how to write, someone who understood how to do web development, so on and so forth. However, on the sales side, We brought in people who were not traditional salespeople. We did something very unorthodox. We brought in ex-construction project managers and turned them into salespeople. Not always easy, but we found that when we brought in salespeople, they couldn't speak to the construction companies. So it was really important. And so I played a role that actually bridged the gap between the two departments to help them understand how to communicate to each other. And that actually helped us grow that company significantly. So when I say this about the salespeople, keep in mind, look at different types of people that may fit the role, but they may not necessarily have the skill sets that you think initially. So it's important to understand that. Meridian Systems was the leading commercial construction project management company. So it was used, the products were used on the Kings Arena, on the GSA building downtown in Sacramento, on the airport in Sacramento, in the tallest buildings in the world. We were the leading project management provider for, I'd say, 15 years straight. So it was really hard work. And once you get there, you want to stay there. So you do whatever you can to get there and stay there. We bootstrapped that company. That company was started in 1994. It was a long time ago. That's when Microsoft was first coming out. There was no internet, and that's irrelevant for this conversation as I go along the way and talk about Holmes Era. We grew that. We were profitable with that. We took those profits and we reinvested them into the company. So we didn't take them as bonuses. We actually reinvested them to the company for further growth. We then raised late-stage capital from venture and corporate venture funding. So the first step that we realized was when the dot-com was coming out in 2000, we needed to compete with those organizations. So we need to build a SaaS platform. We also needed to build an enterprise platform for our enterprise customers. And that took a whole separate rewrite of our architecture. And so we need capital to do that. We went and secured the venture, the VC funding, and we secured $14 million in 2001. So fortunate for us, it was after the dot-com crash, and we were able to still secure that money, which was also very important to us. And then at the same time, does everyone know what corporate venture funding is? Yes, 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 yes. All right, perfect. So we did secure a $1 million round from one of our largest customers. However, lesson learned. If you asked me, would I do it again? I'd say no, exactly. I'd say no, because there were a lot of conditions with that money. In today's world, some of the corporate ventures, they don't have a lot of conditions because some of these organizations are highly regulated and they can ask for certain conditions. So just keep that in mind. My other founders in the Meridian business, my two co-founders that were there, they might disagree with me. So just saying, this was my opinion only. And we did have a successful exit. We sold Meridian, all cash deal in 2006. And then we stayed. So some of us stayed, the majority of the organization did, for 4 years. So myself and my husband, who was the co-founder of the company, John Bedrosiak, he stayed for 4 years. We enjoyed working for Trimble, the corporation, and then it was time for us to do something different. And we also stayed during the downturn in the economy in 2008. And through a lot of effort and a lot of work, something I'm really proud of that we did at this company, we actually continue to grow our business and stay profitable to meet our parent company's needs during those 2 really horrible years of economic downturn. And it's because we just stayed really, really targeted and really focused. And we followed a book, if anyone wants to know about it, it was called Profitable Growth. It was an amazing book. We just stayed focused on that and had priority objectives, which allowed us to do that. So, you asked me why I told you a bit about the Meridian story, because I think the Meridian story is important, because you can always grab lessons learned, and I have 5,000, probably more. However, Meridian is really important because it's sort of sparked the idea, it did spark the idea for Holmes Era. So, this was spark number 1. These buildings all use Meridian solutions. That's the Burj in Dubai, it's Henderson Land in Hong Kong. This is the dam in New Zealand. This is the Raven Stadium. Can you tell I'm a Ravens fan? DFW Airport and their whole new terminal and their their tram, as well as the Dallas Cowboys Stadium. And it was on the Dallas Cowboys Stadium that I had just been so frustrated. I was like, you've got to be kidding me. How come I can manage all these buildings, yet I have nothing to manage my house? I have paper all over my house. I have information that I don't know what's happening, and it was becoming very, very frustrating. So, part two. Many of us have probably been here. If you haven't, this is what homeownership is like. You buy, you own a home, and you sell it. And you do it approximately 5 to 7 times in your lifetime. Some people more, some people less. So it's a lot of process. Buying a house can have its complications. However, it is a transaction-based activity. And once you've purchased it, you then make the necessary payments to the necessary people or not, and then you actually move on, etc. And same thing when you sell it. You take your stuff, you move out of it, etc. However, when you own it, you have a lot of challenges that occur. And a lot of these challenges that occur, I'm going to make sure I keep my notes handy just in case, so I want to make sure I give you all the right data, is you don't understand what needs to be taken care of, or you forget what needs to be taken care of. This is very common in first-time homeowners. You may not know what you're insured for or not insured for. In fact, I had a friend's father who was in insurance came over and told me all the different items in my house that was not covered under my basic homeowner policy. I was stunned. I was like, how come no one told me this? My insurance company had never visited my house. She didn't know what I had. Everyone tells you to take a home inventory, but they don't tell you to bring it back and actually let's review it together, which is also another challenge. 50% of all projects in the U.S. are over budget. And most people in the U.S. don't have a construction or a project management background. That's not their fault, but how do we actually help them manage that? And I remember I was managing all of my data on Excel spreadsheets. It was in like 7 different locations in my house. I could never find everything in one central location, and I didn't know how much my house was worth. What's the equity in my house? What's the value of my house? And then finally, what does my house actually cost me? I knew that I was pushing money out there about my house, but I couldn't find it in one central location. And it was frustrating me. And the reason why it was frustrating me, because I suspected I was spending more on my house than any other item. And a study came out in 2015 that that is actually the case. Homeowners spend 31% of their entire income on their homes. And that incorporates all of these different things, your mortgage, your taxes, your finances, and everything else. And I was just frustrated. There's gotta be a better way. And then the unthinkable happened. Brand new house, couple years in, just past warranty, my hot water heater goes out. Just so typical, right? And I'm originally from Maryland, not originally from this area, so it was also a big learning lesson. The materials are different, the weather patterns are different. I still keep asking, where is my basement? Where is my basement? And believe it or not, a basement would work well on the heat that we have out here because it would be nice and cool down there. It'd be funny. And then, learning about irrigation systems. It's another thing. I was like, what? How much does this cost? All these different things were happening, and I was just, the unthinkables were happening, and this hot water heater broke. And I was like, why is the shower cold? This just doesn't make any sense to me. And so I started realizing that it was a hot water heater. They came in, and they said to me, you need to flush your hot water heater. And I, excuse me? What do you mean flush my hot water heater? And I was like, okay. And my husband, I turned to him and I said, don't you know anything about this? And he goes, no, he didn't know either. And I was like, okay, this is crazy. And fortunately for me, I had the disposable income that I could replace it right then. And I told myself, how many people do not have this disposable income? I mean, that's crazy. If they can't replace their hot water heater, cold showers are one thing. Some people say that that's actually healthy for you. But not being able to wash your dishes with hot water, all of a sudden you start worrying about bacteria and everything else. This is just like a downstream problem. And I said, there's got to be something out here to help everybody who owns homes take care of their homes in an efficient way. And so I wasn't going to be foolish. I wasn't going to go start another company and go build this product if I didn't understand what the market opportunity was. That was really important. I wasn't going to spend millions of dollars just to build a product for myself. That's just not just the best idea. So we went and we reviewed the total addressable market. And by the way, this is something that if you are going out for funding for any of your companies, all investors are going to look for this as well. They're going to ask you, what is your total addressable market? So because there's nothing else out there like Holmes Era, we had to figure out what we were trying to solve. We're basically kind of like a personal finance tool for homeowners. So we said, how much money do people spend on personal finance tools? So we ran those numbers, and we also identified that there's 120 million homeowners in the US. Now let's be real, not all 120 million are going to be users of Holmes Era. And we recognize that, but we wanted to make sure that we present all the data possible so we can show the best light to our investors. We also recognize that there's 5 million homes that are bought and sold each year. And during those 5 million homes, $9 billion is spent on real estate marketing each year. The other thing we recognize, and we played this one a little bit more conservative, if you take all of the contractors, all the insurance providers, all of the real estate companies, mortgage companies, home equity lenders, et cetera, there is 1 million advertisers that are looking to spend $10 billion on online ads. I'll give you another tip here. We also target insurance companies. The top, I think, 10 insurance companies spend $3 billion a year on television ads. Just the top 10. And they equate for, I think, 15% of the total insurance market. So there's a huge opportunity here about Holmes Era, and you're probably wondering, why are you bringing in all these other industries? I'm going to get to that. But we also understood, because of the Meridian days, you saw all those different projects worldwide, we knew that people were automatically going to find us online, and they were going to need a solution like ours. So we said, okay, we know that this is not only just a US market, we could take this to international markets, and we have experience doing that. So we're going to double this. So basically, we feel that the total addressable market is $50 billion. So once you start realizing that, which is important, then you go, okay, I can justify spending money to build a product like this. I can justify going out to market to do this. So I've got the problem. I've got kind of the idea in my head. We've got the market size. Now we need a team. Now, everybody probably talks about this. You need a team. So John Bedrosic, my husband as well, then myself, and I could do a whole session on working with your spouses, and I've done it for 20 some odd years. And you can see here that we also needed a third co-founder, because John and I do not have development skills. We know how to design product, we know how to communicate in technology terms, but we don't have a coder's background. So fortunately, David was available, and David was Meridian's ex-CTO, who was no longer working for Meridian. So we make a flight to Vancouver. We start talking to David about this idea as well. He then says, okay, let me go look about the market size, and let me go do my research, and then I'll make a decision whether to join or not. That took a weekend. He said, I'm in. And so I was like, fantastic. So there's a positive to this. One, you can see we each have different skill sets. Two, we also used to work together. And because we work together, there is a ton of trust that we already have with one another. And we also understand how to collaborate with one another. And we know how to let each other do what each other needs to do. The second thing that we did, so now that we have all that, we started Holmes Era in 2011. Didn't waste any time at all, quit December 31st, started January 1st. Would recommend that you take a little bit of time off because it gets very stressful. And then we spent the year building Holmes Era, and then we launched it in 2012. And we were methodical about building it because we knew we had to build a platform from the ground up. And we knew this was a big effort because, lo and behold, I did not realize my husband had been tinkering for 2 years after hours and on weekends, and actually building a product design for Holmes Era. He'd been listening to all the things I'd said I wanted. He'd been asking me questions, and I really wasn't paying attention. And he was building this platform from the base up. And he was thinking about every scenario that could possibly happen, short-term and long-term. Because what we're about to endeavor upon is a very complicated market, and it's why I think no one's done it yet. And how do you actually bring all the parties involved? And how do you build the best foundation you possibly can, knowing that you have to think 10, 15 years out? And that's what we did. The other thing I bring up is I told you we each have our unique skill sets. It's really important when you do form relationships in startups that you have your own swim lanes. And it's really important that you try to divide them as best you can so that you can be as efficient as you can. Now, that's not always going to work. You're going to cross over sometimes. For instance, John takes on technical support responsibilities, but if John's not available, David and I take those on. If John has to accelerate it or escalate it to David, he will do that because it becomes a back-end issue, something. So that needs to happen. If I am dealing with business development and I'm overwhelmed with the number of business development, I go to John and say, okay, I need you to take some of these leads. And so we can move forward with that. And then same thing goes for even asking for funding. If we go after funding, which is part of John's responsibility, and they have a female fund, they will put me and say, you need to pitch this fund. And I said, perfect. But we still try to stay within our swim lanes, and we make sure that we communicate to the other on what's happening. And we are, I heard somebody say Salesforce. We are a Salesforce user because of there's so many potential crossovers that we want to make sure that we are all on the same page. So all of our business development leads and all of our investor leads are managed through Salesforce. And it makes it efficient for us. The other thing I bring up is know your strengths and weaknesses. I mean, this is time to get real. And the fortunate part is John, David, and I have worked together for so long that we tell each other, check your ego at the door. This is not about ego. This is about us getting to the end goal. And there's no hiding from weaknesses. And I'll give you a really great example, two actually. The first one is social media. I understand the value of social media, but I also realize that I'm not strong at it. I'm more effective in business development. So I outsource social media, which just makes it more effective. And coincidentally, that's an ex-Meridian person too who started a business. I'm super excited because we already built a relationship. David will tell you he's phenomenal back-end development, architecture structure, hosting structure. But if you ask him to do UI and UX, which is user interface and user design, he is not good at that. So we also outsource for that as well. And there's also a phenomenal company in Sacramento that can do that. And they have done that on our newest version. So it's important to recognize what your skills are and what they aren't so that you can find the right resources to support you. And that's what I just said, is subcontract out your services if you need them. And then when you do subcontract them out, you can have them on contract indefinitely for a period of time, on a project basis, et cetera. And you probably already know all that, but I want to make sure you know that. And always be learning. Always. I can't stress it enough because things change all the time. And like I said earlier, Meridian was built in a time when there was no internet, no social media, a lot of things. So lo and behold, we have Holmes Era. So this, I'm leaving this up here for a reason. There's a lot of different things happening here. The first one is, what you see here is our second redesign of Holmes Era. This is not our first. It's our second. The second thing you see here is that Holmes Era is accessible and the exact same user interface on all devices. So initially we had two separate development structures, one for the mobile and one for the desktop. That was ineffective because we had to listen to our users and our users were using the systems interchangeably on all different devices. So we needed to make the same look and feel for everything. So we went to a web responsive model, and that has been significantly more effective for our users. And we see a significant more level of engagement, and we also see more people signing up because of that. The other thing that you see here is you see these key terms, digital home management. Not so fun. Consumers don't love this term. So it's also important to understand. I have it up here because we're still trying to figure out what the best term is. But businesses love this term. So when I talk to all of our corporate partners, they get this term. It's easy for them. Consumers are like, what is this? And remember, we're creating something new as well, which is also complicated. So we've also used terms like all-in-one suite of apps to manage your house, which users tend to like better, consumers. So, okay, we'll do that. The other thing that you see here is kind of the user base itself, and I'm going to get into that in more detail. We walked in thinking women between 35 and 45 who manage their house are going to be the users of Holmes Era. That's what we walked in. We were just confident. We're like, this is it. Be open to be challenged, because that is not our users. Our users are all generations, almost even, not quite. It is right down the middle, men and women. It is all 50 states. It's 20 countries outside the United States, and we don't even market to anybody outside the United States. And it's people who are looking to manage their house. And there's no one profile for that, which becomes very challenging for us. But we start narrowing things down, and we can start measuring that and start targeting our marketing a little differently. To give you an idea of Holmes Era itself, as you can see, all-in-one suite of apps to manage your house. We have several different aspects of Holmes Era: the dashboard, inventory, maintenance, projects, finances, and marketing of your house. Now, we did not release all of these features at once. That would have been foolish. It would have taken us 5 years to build this and then release it. So that's the one thing I believe in the book Lean Startup. Get it out, get it out. So what we did was we released these three components in Holmes Era. And when we released it, we knew we needed dashboards, and we knew we had inventory. That was the natural progression, and that was easy. However, inventory is something you do once, and maybe you update once a year. It's not something you do regularly. And so what we needed is to make sure we created engagement. So it's why I was adamant when we released it, it had to be inventory and maintenance. And the value that it brought to us is several things. When we first released Holmes Era, we also charged for everything in the product, because we wanted to test whether people would pay for it or not. We realized that that model wasn't working, so we went to a freemium model. So dashboards and inventory were free. They still are today. And then maintenance is paid for. And so that enabled us to learn how to actually price our product, how to make money from our product, and also what consumers are willing to pay for it. And then as we went on, projects came out, then finances, then marketing. And each time we've enhanced something in one of these areas consistently. We make inventory more accessible and easier to manage. We populate the maintenance calendar, which we didn't initially. So we added tasks in there. We had templates in projects. We added more templates. We added tasks because we already had the items, finances, so on and so forth. So all of this is over time, and it's over basically an 8-year period of time. The next is know your go-to-market strategy. Many of you guys and gals know this, but maybe you don't. A lot of people have an idea of where they want to go to market. We knew that we had to go to market B2C, so business to consumer, because consumers are the end users of our product. So we knew we had to do that. However, we also knew very early on that we would need a professional type model, because we knew that we would end up building relationships with a lot of companies. That came faster than we anticipated. So we also had to build a Holmes Era professional. But that took us a whole nother year to add on to that 2013, at the end of that, we released that. But those organizations came fast and furious, and we didn't have anything for them. So we had to really regroup what we were doing and put this Holmes Era professional out. And then what ended up happening was we started realizing that those organizations do a couple of different things. They can give the gift of Holmes Era to their customers. They can be an influencer of our solutions. They can actually introduce it to their customers. And each one of these industries benefits. And the reason why they benefit, because if you think about all the things that touch your home, the majority of the organizations you work with are transaction-based activities, unless you have ongoing service professionals. And how do they maintain that relationship? And those industries are all becoming highly competitive because of all new tech that's coming out, all new capital that's going into these industries. I mean, there's an industry just for insurtech, industry just for real estate tech, and then same with fintech. So investors are actively investing in organizations to do this. And in fact, investors are actually investing in net new insurance companies, net new mortgage companies, because the industries are so successful. Let's just throw in more competitors. So these industries all need to figure out how to stay connected. And so they can do that with Holmes Era. Now, something to consider with these industries, I will be the first one to say, we went after real estate first. It's not an easy market to go after. My personal opinion in this business is if you go after real estate, especially the agents, you might as well be going after the consumers because it's the same kind of concept versus if you're going after the corporates like insurance and mortgage, they find more reception to what you're doing. And a lot of people think that they have preconceived notions of these industries. They think that if you're an insurance company and if you take an inventory, they don't want you to take an inventory because they don't want to pay you out. That's not the case. They absolutely want to have a good relationship with their customers. However, if no one's taking a home inventory, whose fault for not taking a home inventory? What happens? I mean, nobody wants to put blame anywhere, but it's like nobody can read anyone's mind of what's in someone's house. And so it really does take an effort to make sure that you get everything documented and provide that to them. But what's interesting is they didn't only care about inventory, they cared about the whole product itself as well, they being an insurance. They care if people take care of their house because they get less claims. They care if people update projects because they want to make sure that they're also covered on those new projects. And how many people actually update a project and they forget to call their insurance company? So often, and they're just not covered if, God forbid, something should happen. And I'm not just talking about the disasters we've all seen across the country, because there's been in numbers, record numbers these last couple of years, but I'm talking about even something as simple as a theft. Someone can come in and just take everything or destroy everything. How do you get reimbursed for that? So we recognize that these are the key 4 industries, and we focus on these outbound marketing and outbound business development. However, there are a ton of industries that still call us. Financial advisors, estate managers, and estate attorneys. There's a boutique industry called home inventory professionals, professional organizers, maintenance contractors, remodeling contractors, property managers, the list goes on. We are reactive to those. There's not enough time in the day and not enough people for us to be proactive about every solitary industry. And you will spread yourself too thin. So just keep that in mind. That's just a big lesson learned from my perspective. The other thing we did was we ran a survey with HGTV, and we're determining how to find our partnership with them a little bit more solid. But one of the things we did there was they wanted to understand if their users would resonate with a solution like Holmes Era. And we did never use the word Holmes Era. We just gave them 4 questions. And the questions were, would you need a maintenance schedule solution? Do you need a home inventory solution? Would you need assistance for documenting your project details for resale, and so on and so forth? These numbers came back, and we use this a lot when we focus and target our funding aspects, and when we are also talking to our business development companies, because these numbers are astronomically high for HGTV. They said, literally, we see 10% and that is high. So needless to say, we're doing our best to figure out what our next steps are with HGTV. Challenges. So there's a lot. It's been a long time. But I'm going to focus on Holmes Era, not Meridian. I can tell you all kinds of crazy at Meridian, but we're going to focus on Holmes Era. So the first thing was length of time to educate. So when we launched in 2012, there was a couple steps that needed to happen. The first step was not a lot of consumers understood the cloud, and they were concerned about it. Coming from an industry where cloud was like the norm, and construction companies were clamoring to get it, we couldn't understand because construction companies are behind. They were behind in technology. We couldn't understand why others didn't get it. What we started realizing is that there's actually a lot of industries that were behind in technology, and consumers just didn't understand the cloud. They literally thought it was what's in the sky. We don't know. So we had to educate them on that, first of all. The second thing we had to do was educate on privacy. And privacy was really important. It's more important now with the Facebook situation, but it was important to them because if you think about the contents in their house, any one of us, our houses, they're extremely valuable. If you really add them all up, they're extremely valuable, and people want to know that they keep their data and it's theirs, and they organize it, and it's not going to be sold anywhere. And that's exactly what we do at Holmes Era. We do not sell this data. It is the privacy of the user that's using it, and they can use it, and that's why they can pay for it. So that's why they have it. We also had to describe Holmes Era. Holmes Era the brand, Holmes Era the name. I get it all the time. How'd you come up with the name? How'd you do this? What about this? What about that? Is it Holmes Era, Holmes Era? I say tomato, tomata. Do whatever you want. And so that becomes very tricky as well, but we had to build trust with them. And then finally, they had to understand the product. Why would it be valuable to me? And as part of that education, we also realized that our marketing messaging, we had to change frequently. And what we realized is some people are at different stages of their homeownership life cycle. And they're in different parts of the country. They're in different size homes. There are different family structures in the homes, and we had to start addressing that. So we started educating them through micro messaging. Now, there's always a risk with micro messaging, and that is your overall brand could be affected. But we didn't really have a big brand yet. We weren't like Oracle. We weren't like Microsoft. So we had nothing to lose. Let's just try it. And what we found was when we did this micro messaging, it helped people understand the product better. And they could actually ask specific questions to their specific needs and focus on the parts of the product that actually fit what they're looking for. Lack of funds. I might as well just say lack of resources because there's never enough time, never enough people, and never enough money from what I've seen in both, in both Meridian as well as Holmes Era. And you have to be really creative when figuring out marketing. You have to be really creative when going after opportunities. Cold calling does become your friend. Connecting with everybody you know on LinkedIn, hey, can you introduce me to this person, does become an aspect of your business. And calling everybody you went to college with, all kinds of stuff, just meeting everybody. And also making sure that you understand how do you effectively build a product and really keep the cost down as well. So all of these things play a role. And then how do you actually make your capital last? I see so many people get capital from somewhere, whether it's angels, whether it's VCs, et cetera, and they blow through it too quickly. I have seen just in everything that I've talked to and all the other startups that I know in the world, there's never been enough money up front. And that's why a lot of people have to go after a lot more money. So I'm a firm believer in just conserving some of your cash to really play it out long term. And maybe that's just the way I was raised as well. But I just see oftentimes it's a marathon, not a sprint. And if you go back and you look at some of the top companies that have succeeded, and let's ignore the Instagrams of the world. That's a very unique situation. But even Facebook, it took them 8 years to go public and they raised $1 billion. If you look at Lyft just published their data to go public. It's billions of dollars they raised. And they've been doing this for years and years and years, and now they're going to go public. And they've had to deal with so many issues. So it's all relative and it's all crazy. But I'm just giving you those two examples because I think people forget how much it actually took these companies to succeed and how much money it took. It's also a noisy environment. As I indicated earlier, there was no internet with Meridian, which was a good and a bad. So there was no internet with Meridian, so you couldn't educate people online, and it was years later that you could educate with webinars. But now the internet and apps and just life in general, people are busy, and it's a noisy environment. And then how do you actually trust where you're going to get the best information and from whom? Length of time to scale. I just said that earlier. It's because of the levels of education we have and because of the noise, it's longer to scale. And we're starting to now see a lot of traction. So we closed a big deal with Chubb Insurance last year. We have a big deal that we just closed earlier this year that I can't announce just yet. But these deals are then taking off, and that will then continue to give us more users and grow our organization. Competition, strangely enough, I'm going to start in the middle. Lack of competition is actually a problem. And a lot of people don't understand. They're like, I want to be the first one. I want to be the only one. It actually isn't pleasant being the only one because you're constantly telling people, what's digital home management? I don't understand. Why is your product so special? Why do you have it all in one fell swoop? I'm like, because the house is a complicated mess and you need to manage it. We're going to make it easier for you. Believe it or not, competition is a good thing. It's just a matter of what does that look like? and it may be slightly different competition. But people need things to compare to. Has anyone read the book Predictably Irrational? Ah, brilliant book. If you haven't read it, I highly recommend it because it talks to these types of things. And humans are predictably irrational in the way they make their decisions. And it helps you understand behavioral economics. The other thing that happens is a lot of people say, well, I've already got something myself. And this is both consumers and businesses. My IT company can go build this themselves. Okay. I've got it right now, but okay. And believe it or not, a lot of these companies are coming back to me because they're failing miserably on building their solution. Others are recognizing, you know, I don't have to build it. I can go to market right now because you have this. I go, yes. And they're going to market. A lot of things that happen as well as other priorities. When it comes to consumers, it's just life. Life just comes into play. When it comes to businesses, they get a lot of priorities from a lot of different departments, especially the bigger the organization. They have a lot of different departments vying for activity. And then selling to the enterprise. Has anyone done that in this room? Yes, we got some people in the room. It's hard. It's long. You have to be prepared. So selling to the enterprise is long sales cycles. The industries that we're targeting are also highly regulated. So that adds to the complexity of the sales cycle. And because our team does not come from these industries, we are scrambling as fast as we can to catch up and to learn these industries. And we are asking as well these industries to be to assist us in that process. And they're open to it. As long as we're open to hearing what they have to say, they're open to it. And then just making sure you set the right expectations. And that's easily challengeable. But I'm just going to give you this a little bit too, because I'm a firm believer in understanding your customers. And I'm a firm believer in not agreeing with everything they want. Because if I listen to all the customers, they would want something that would not work for somebody else. And I have to think about all the different parties involved in using the Holmes Era platform. And I also have to think about today, but I also have to think about the long term. And I'll give you a perfect example. Everyone keeps asking me for, do you have barcode recognition for your home inventory? And I'm like, why should I make it a priority? And nobody understands it. They think because someone else has it, it should be a priority. I'm like, most of the items in your house don't have barcodes. And then who's going to pull out their refrigerator and their stove to actually go scan it with their phone and do it? I'd rather have the video recognition and the AI recognition that we added into the system. And I'd rather have some of the other tools that we've added into the system itself that are much more effective for taking a home inventory. And then we can worry about barcode recognition somewhere down the road. But we do listen to our customers and we do take a look at everything. And so just to give you an idea, this is literally data about our customers. The average homeowner has 200 photos of inventory in their home. We have users as low as 50, as high as 5,000. They get super detailed. They want personalization of the calendar. In fact, so many of our users actually create lifestyle tasks. So the thing that keeps coming up with some of our users is they want to track their dog's haircut. So they have a dog that needs to be trimmed. And so they have to track their dog's haircut. So they want to make sure it's part of this calendar. They definitely use our system for kitchen and bathroom models when it comes to projects, which makes sense because those are not only the most expensive rooms, but they're the money rooms that add value to a house. And they're the most complicated to manage. And then obviously the other ones. It's any home range from $100,000 to $10 million. The average is about $400,000 to $500,000. And that mostly it's suburban homes. However, we do have condos and we do have large estates. And a lot of the large estate players, the homeowners are not managing their homes, their house managers are. We found that out as well. We did have one large estate person. He wanted me to give him my source code. And if I told you who it was, you guys would laugh. But he's in tech, and he wanted the source code. And I said, no, he can be an investor and get the source code, but no. So, probably. But yeah, they just want everything inside their organization because they want to keep everything safe. Event-driven signups, that goes back to the micro messaging. We basically find that each different generation and each different type of homeowner signs up for different reasons. If you're a first-time homeowner, you probably don't own a whole lot yet, so you don't have a lot to track in inventory. But what you do want to track is you want to track this maintenance task because I don't know where to start. I bought this home, now what? You know, if you are someone who has a lot of things in your home, inventory is probably a big priority for you, and you want to track all the details associated with that. And then when people are buying and selling homes, weather disasters, it may not always be just the person whose home is affected. It's friends. Friends who hear about, oh my gosh, this tornado hit. Oh, yeah, I'm going to get my home inventory done. Oh my gosh, this happened. Oh yeah, I'm going to take care of it. So disaster events and weather events not only affect the actual person that it's happened to, but all the people surrounding them. Also getting you into demographics of our products. I showed you it's all 50 states. You can see here that the largest states are the most popular usage of Holmes Era, so California, Texas, and Florida, and then New York. However, Virginia's given everybody a run for their money. I don't know what's going on in Virginia, but people in Virginia love their houses and they love to remodel them. So that's happening, as well as Georgia. And then Arizona's an up-and-coming state because we have a partner there who's actually recommending Holmes Era to everyone they know, which is actually fantastic. You can see here the generations. It's all over the place. And each one of those generations is actually leveling out. So it's getting more even where everybody's using it. Anyone who feels that they want to take care of their home is really looking at Holmes Era because it's very intuitive. And then basically right down the middle of men and women. And then we always look at user statistics. And the reason why we do this, and I highly recommend everyone do this with their application, is you want to understand what's actually happening. We thought for sure when we went to the mobile app and we made it consistent with the desktop would get less usage. It did get a little less usage, but what got the most less usage was actually the tablets. The tablets are almost non-existent when the desktop and the mobile are right down the middle at 40, basically 44%. I think it's changed already. And then you can see where the duration of time is happening. So it's important to understand what duration of time is happening inside your system. So if you look at this, people are in our system for a very long time, approximately 10 minutes at a session. And when they first get started, sometimes it's upwards of 20 minutes of a session. These numbers are very important as we go after funding. And it's also very important to help understand where your consumers and where your users are moving around in the system and what's important to them. How many pages, trend conversions, et cetera, et cetera, et cetera. And so if you're not tracking this information, I highly recommend you track data about your product because investors will look for it, and investors will ask you these questions. If you do not have them on the top of your head, they will not invest in you. Sorry to be so blunt, but I'm just going to be blunt. We also had to make some changes to our email communication, and this is an example of this change. We send out reminders of tasks that are coming due, but we also used to send out a bunch of different emails. And we realized that those emails were too many. And they were distracting for the user, and the user was not happy about it. So we said, let's go back to a model that actually looks like a statement. So we basically give them a monthly statement instead. And that keeps it concise, and it allows us to configure it easier, and they prefer it. So what everyone goes about and they say, oh, you need to send 1,500 emails a week, you need to do this a month, whatever. We don't do that. We actually pay attention to our users, and this one email a month is exactly what they need, and that's all they need. And they stay engaged themselves throughout the month. And yeah, I'm putting it out there. So when you are asking for money, I also, you have to know your customers, know your team, but you also have to know where you're going to spend your money. And you have to be very specific about it. In our world, if you look at this, 57% of all the proceeds will go to growth and customer acquisition. We know that as the priority in our world, and that's marketing and biz dev. And then the other portion of it will continue to enhance the platform because we're going to continue to create more personalization in the platform. And we also have to build out internal processes. That's the other thing. People tend to neglect internal processes as well. It's very important that you understand that, yes, you do have to pay legal. And yes, you do have to figure out, are you going to manage your accounting or are you going to outsource it? Or if so, are you going to use a system? And then you do have to file taxes because was tax day yesterday. And so all these different things. But it's also important that you also be mindful that you can tweak these numbers and move money around if you need to, but be very cautious of doing that because it will affect the downstream goals that you have. But these proceeds need to be tied to your goals. What is your core priority objectives? What are your core goals that you need to accomplish and for what period of time? And then my other lesson learned and my closing is know who you are and own it and be proud of it. And so Holmes Era is a proven business. We know we have to scale, and that's where we are today, is scaling. We know what we need to do to scale. We have a successful team. We've got product. We've got users all over the world. We've got a great business model, and we have a variety of revenue aspects that I didn't go into, but we have several different ways we make revenue. And then we've already completed a $2.4 million seed round, and then we know what we're raising. So we have our call to action. We know what we've done. We know what we have. Here's what we need, and here's how we're going to use it. So I say own it, be clear about it, and then investors will appreciate what you're doing. But investors will always ask you more questions because they need to know that you know your business. They need to know that you know what your industry is. And that's it for me. Any questions?
So when did you complete the seed, and how many people do you actually have, like real full-time now?
Great question. So on the seed money, it took us, oh my gosh, I'm trying to think about it. Took us, I think, 2 years to close. And ironically, we closed it with a unique situation. So that's a good question because it teaches you to get, look at money from different avenues. And so the co-founders put in the bulk of the seed round because we did well at Meridian. All of us did. So we put that in. But we were having trouble getting angel investors to understand the idea or to feel comfortable with the idea. A lot of angel investors were not familiar with B2C or they weren't familiar with this concept. And once again, because it's not something that's already been done, a lot of people are very conservative, especially in the Sacramento region. So taking a chance on something like this isn't always their best option. However, the unique thing happened. A friend of ours kept pinging us, asking us when he could invest in our company. We thought it was a joke, actually. And he kept pinging us, and he kept pinging us. And he's a surgeon. And I'm like, why would you want to invest in a tech startup? He understood how hard we worked, and he understood that we were going to give whatever we had, 500% to make this happen. And so we said, well, what if we did do this? So we talked to our attorneys. We said, could we fill out our seed round with all these different friends and family? And he said, yeah. And so we started calling everybody we knew. And by the way, there's something I read that said, if you don't call somebody, they're insulted that you didn't call them. However, if they can't invest, you just say, okay, that's great. No pressure. And I made sure everybody understood no pressure. And I was very clear. Some people I made sure they went through webinars about understanding what they're investing in because the money came in from all over the country. And we constantly let them know, you could lose this, you could lose this, you could lose this. Do you understand the risk involved in this? They didn't care. They were like, we want the opportunity to invest in a tech startup. We know who you guys are. We want the opportunity to make this happen. And they were in all different kinds of industries. Some were in tech, so they were previous colleagues we worked with at both Meridian, but also in the Meridian community. They were construction professionals. They were surgeons. They were doctors. They were, I'm trying to think what else they were. I mean, they were all over the place, and they all wanted to be a part of it. And so we said, okay. Yes?
Were they all accredited investors?
They were. All of them were. And they were all over the country. So that's the other thing. Our network is pretty big, and it's all over the country. So I'd say half of that was not from the Sacramento region. Half of that.
C Corp or an LLC?
We're a C Corp. Yeah, so that happened. So that was be be creative and look at alternative sources of capital because you never know where it come from. And then the other question you asked was how many employees in Holmes Era? So we're also very lean and we're also very frugal because we know this is a marathon. So there are 3 full-time co-founders in the business, unpaid, bless you. And we use all contractors and we use them either on a regular basis, so they're on a monthly contract and they put hours in during the week or what have you, or they're on a per project basis where, for instance, our UI UX designers, they were on a fixed contract for 5 months. And so that's how we manage our budgets because we know that in a place where we are today, it would take the next round for us to start hiring employees. We didn't want to start getting into all of that. We wanted to make sure we were still in a place where if things didn't quite pan out the way they needed to, we didn't have to lay people off. I've been down that road before, don't like it. So with the Series A, we have allocations to hire people.
I help a lot of early stage startups, so I have a lot of fiscal kind of questions. Sure. Are you growing this? What is your plan? Are you looking for a harvest event? Are you making this a lifestyle company? Are you looking for an M&A?
So those kinds of questions are, we want to grow another company. We're excited for that. Will that end up being a publicly traded company? Will that end up being an M&A situation? We don't know. The last company was sold to another corporate company. We knew we weren't going to go public with that company because it's very niche. This company we can take public if we choose.
On your branding, your company name, my first thought is, oh, you're selling something to watch over my house, not the fiscal aspect of it. I would offer you promote the fact that you're helping managing the most valuable asset that they may own for the typical person. Because if they look at how much equity they have in their home versus what they have in their 401k or in their investments, the house is it. And you may want to look at doing advertisements of the fiscal industry versus your house value. And have you considered doing niching in terms of going after celebrity homes as a unique niche to help grow bigger and better? Rather than the suburban $400,000 to $650,000 home. You know, go for the 10 million and up, the Saudi princes,
So they don't generally manage their homes. They work with house managers. So we do target house managers, but it's not a proactive target, it's a reactive target. And the reason being is we have enough on our plate with the insurance and the mortgage organizations that actually have access to millions of users, and that's already proving to work out. So we're going to keep going with that. But as we continue to build our relationships with those house managers, they will then take it to their customers, but they won't tell us who they are, which is rightfully so. It needs to be private.
You mentioned micro messaging. Could you define that a little bit for me?
Yeah, so it's a new term that's coming out, and because I didn't coin it, but micro messaging basically takes smaller messages and really focuses it on a particular comment, audience, portion of your product, what have you. So I'll give you several examples as it relates to Holmes Era. If you are a millennial, you're more than likely a brand new first-time home buyer. So we focus only on maintenance when it comes to the millennials. If you are somebody that lives in geographies that get impacted by some level of natural disaster, then we will bring that to the table in those areas. So in some areas where there is no impact of natural disaster or it's not as frequent, believe it or not, those people feel less threatened by that. They feel less, what's the word I'm looking for? They feel less concerned with that. They don't think it relates to them. So we changed the messaging differently. And going back to fiscal responsibility, we also bring that in as managing the financial aspects of your house to a lot of users. We also look at, another good example, highly organized people. Highly organized people like to be organized. So we use terms like organization and organize your home rather than manage your home because they love that. And there's a unique group of individuals that focus in on that area of organization versus other individuals. When they hear the word organization, they're like, no, I'm not going to do this. This doesn't appeal to me. And you'd be surprised at how that works. But it does require testing. And that's the one thing I love about social media. I will say this. You can test a lot of micro messages for free and see whether or not it works or not. And you can see the direct traction to your website and the direct information and the way people respond to those ads and who's doing it.
How does your product apply to rental properties?
How does it apply to rental properties? So the way my product applies to rental properties is I would recommend you use Holmes Era Professional. And it's on the same website. And basically you sign in and then you buy a property every time you have one that you want to manage. And the reason why we do that is because it only requires one login and one password, then you can manage unlimited properties. Versus if you log into Homes Out of the Consumer, you're managing basically one property at a time, and you need a separate login and a separate password each time you do that because the level of security that we have is so outrageously high because of what we're trying to protect.
So I'm kind of fascinated by the friends and family like seed round. I've never done one of those. So was it an equity round or was it like convertible notes? Convertible notes, and so you don't have a huge cap table, a complicated one. Okay, so then, right, but it's not super complicated. You don't have like 50 people in it. So with the Series A then, is the note conversion happen with the Series A, or is it everybody get a pro rata right to participate in Series A? Or
Honestly, I can't remember the details of that. I can't remember, but I do believe it does convert in the Series A, but don't hold me to that.
Okay. So you're going to need some lead investor to set the pre-money valuation. Okay. All right. I had one other question. Have you done like the predictive maintenance stuff, or has that come up like for the stuff in the house, right? Like, guessing at when people should have something serviced.
Yeah, we do a lot of that inside the system already. Okay. Now, we want to drill that down into more personalization, which is where the funding also happens, is when you can learn more about the property, you can actually be more accurate. So that will continue to improve in the product itself.
Is your fee structure based on the price of the property, or is it a fixed price?
No, it's a fixed price. So I'll tell you exactly what the fee structure is. So we had a fee structure of, I told you originally, this is a good lesson learned, that was everyone paid for everything. Realized that didn't work. So we tried the freemium model. So basically very similar to LinkedIn. Well, recently we are implementing a different model, a 3-tier system model. And it's actually working in our favor, which is really, really good. So inventory is free, except for a few little nuances in inventory. Maintenance, projects, finances is $59 a year. Nothing to manage one of your largest assets. And if you want to manage up to 3 homes, and you want to manage, and you want to market your home. So you can actually take a subset of this data, you can publish it to a public website with your real estate agent so that you get more SEO and more traction on your property. And then you can transfer all that data to the new homeowner, which becomes basically Carfax for your house. That is $99 a year. And we have a ton of people signing up for $99 a year right now, because they want to manage multiple homes.
I'm curious if you have any connections like for the quick estimate with, other software like House, for example, that to work with contractors to produce that estimate, or how?
Yeah, so we don't have that at this present moment. And the reason we don't is because we don't want to be in the business of be a service provider network. We want to partner with somebody. And we're talking to somebody to partner with them. And the second thing is quick estimates. We do have quick estimate capability in our system. However, I'm not a fan of quick estimates. And the reason why I'm not a fan, look, I'm putting it on video. The reason why I'm not a fan of quick estimates is because every user in this country has a different house. And they also have different tastes. Some people want high-end kitchens. Some people don't. Some people want high-end appliances, but they have to curb back everywhere else in the kitchen. And because you can easily buy a $2,000 faucet. As I was looking at one, oh no. And so those things happen. And so what I believe in is helping people manage the process of a project management and a remodel task with or without their contractor, not to actually give them just purely the estimate, give them the complete task from start to finish to manage that. Because just because you have an estimate doesn't mean you're going to be on budget. And that goes back to our project management skills. Thank you. Thank you so much for having me.